Absolutely, just getting weaker tick by tick and nothing exciting because yesterday also the markets were not doing anything great. Today also when you look at it, 19,750, it's below those levels as of now as well, almost at the day's lowest point. Nifty down almost 0.5%, Sensex down even 0.5% as well. And look at what the mid cap and the small cap space is doing as well. Let's look at that because that is something to watch out for as well. Nifty small cap is down almost 0.1%, and mid cap also down almost 0.1%. So yes, still performing better than the broader markets, the Nifty and mid cap and the small cap, but still there's pressure coming in over there. Apart from that, the sectors that are managing to hold on to some bit of a green is the Nifty Media today as well as the Nifty Realty, still holding on to some bit of a green. Other than that, all the sectors are falling in trade. Nifty Auto among the top sectoral losers, down more than 1% in trade. Nifty FMCG too, down almost more than 1% in trade as well. So clear weakness that we're seeing coming in terms of the markets. Nothing exciting there as of now, but there are some individual stocks also that are seeing some bit of a positive move, that is HPCL, REC and Bandhan Bank, which are holding on to some bit of a gain there, Shrishti. But otherwise, other than that, there's clear weakness coming in the markets today.
Clear weakness in the markets today, but one pocket, Winnie, is showing excitement, and that is the EMS space, electronic manufacturing companies. And on to the buy now, sell now lens, we're going to be focusing on that as brokerage firm Morgan Stanley maintains outperformance stance on a couple of electronic manufacturers. But what is the rationale behind the ratings? And in that note, which counters are in focus? Let's get in all those details from our colleague Anisha joining us right now. Take it away, Anisha.
Initiation that Morgan Stanley has done on Keynes as well as Sirma SGS, and it's happened with an overweight rating because they're quite positive about the whole sector. The target price for Keynes is around 2,440 bucks a piece, and for Sirma it stands at around 671, so a decent upside from the current level as well. Remember, of course, all of these manufacturing and the EMS plays have seen a massive run up this year. There have been a lot of triggers leading to that. PLI schemes were announced last year, which has added a bit of fillip to these stocks. There was a lot of efforts made for substituting the imports with localization, whether it's laptops, tabs, etc. And all of that had given another leg up to some of these names. Today, what Morgan Stanley is talking about is the overall potential that is there of the electronics industry in India. In fact, they're saying that it has the potential to grow at a revenue of almost 21% from FY22 to all the way to FY32, and they are expecting that the electronic manufacturing industry will reach the mark of $604 billion by FY32. So a rapid growth of almost 20% per year for the next decade or so is what they are penciling in. A couple of factors leading to that, of course, you have the domestic growth, which is very strong. You are seeing a lot more financializations of saving, the aspirational spends coming in. There's a larger population available in terms of the workforce on the supply side. It's cheaper labor force as well, and that means there is a lot of potential for exports as well. In fact, if you look at India's vision of become a $5 trillion economy, what Morgan Stanley is saying is a large part of it is going to come from offshoring, which is going to be one of the big pillars. So earlier offshoring was only limited to software as we know it, but now it's expected to pick up in manufacturing as well. So overall, a very positive note coming in. They do highlight that they prefer the B2B players, which is Keynes and Sirma, versus Dixon, which has a bit of B2C as well, perhaps because that's why they have an underweight stance on Dixon. But as far as Keynes and Sirma go, they are quite positive.
Absolutely. As far as Keynes and Sirma go, they're quite positive. Dixon is a bit what they are underweight on. But let's continue this discussion with our experts today. We're joined by Kunal Bothra, while also we have Rajesh Agarwal joining in with us. A very good morning to you, gentlemen. And, Rajesh, I'm going to come to you. Now, we have already seen, look at the run-up that we've seen coming in Dixon already over the last couple of years. Keynes, Sirma, even Avalon Technologies, which is amongst the newly listed companies in the last 6 months, that is also seeing a good up move as well. Fundamentally, how are you seeing these stocks? Obviously, there are a lot of positive triggers. Morgan Stanley is saying that 20% growth is expected to continue for these companies over the next decade almost. Is that something you are penciling in? Could we expect this run-up that we are seeing to continue? What is your stance on this?
Good morning. As far as these EMS companies are concerned, they have bright future ahead, no doubt on that. The PLI scheme, the contract manufacturing thing, the run-up, the kind of demand increase we are witnessing in white goods sector, and not to forget the kind of focus of the government in Make in India thing, Atmanirbhar Bharat and all those things. That's giving push to the localization of the market. And recently we have seen some ban were introduced on import of laptops and all this again added to their future. The domestic growth is up. And spending by individuals have gone up like anything. They are spending, buying iPhones and laptops and all those things. So these all things add to the positive side of these companies. And maybe in future they can even go for exports. But the fact remains, valuations are on a very higher side. If you look at Dixon or EMS, they are trading at valuation of 3 digits, and that's quite high, I would say. One should wait for making an entry for long-term investment, but for a short-term, I think trading opportunities might be there. Except for Sirma, we don't think any stock at this point of time is good for investments.